Yeah.
It's just foolproof. That is something I've seen that never, ever, ever changes.
Instead of me saying like, oh shit, I'm going to lose money, I say, oh shit, this is going to be an amazing opportunity.
I was hot today, so I was like, oh, I'm buying this, I'm buying this, I'm buying this.
You also have to be very careful, especially as like a new trader, because this is like a whole different ball game from what we teach. Ladies and gentlemen, welcome back. We're shooting the shit. It's late night. It's dark and shit.
Late night edition, you know?
He's out here. He's putting in the work.
Yeah.
He's taking a little trip soon, so he's got to put in the extra work before he goes.
You know how it is.
You know, we're going to miss him, but he's going to pop in every once in a while. That's the beauty about trading. You can just do it from your phone, put in a little, good luck, happy trading. It'll be 9:30 here, but it'll be 11:30 p.m. over there. You'll be drinking sake bombs, snowboarding, whatever it is.
Y'all are not seeing it. You're not hearing from me, okay? Don't put that out there, okay?
Who's gonna say good luck, happy trading?
I give you the blessing to do it all next week.
Wow.
Yeah,
you're giving me the blessing.
You got the blessing.
Are you knighting me right now?
Yeah. Boom.
Oh my god. All right. Well, we have proof now. So we can talk shit about it.
I'll get this video out tomorrow, so they know next week.
Good. All right. Well, so Shake, what happened Monday?
So we finally saw the first real selling in probably the past 3 months. They used the coronavirus as the reason. It could have been Iran. It could have been a number of things. The market does what it wants, and it reacts to the news that it wants to react to. I don't try to overthink it, but the coronavirus was the news that they used to put in this intermediate top. Whether it's a top or not, I don't know. But we saw that first real selling. It's the first time we've seen the market change in 3 months.
Yeah. And definitely it wasn't as bad as I was preparing myself for it to be. And the only reason I say that is because, the last time the market did what it has been doing for the last few weeks, when it finally did catch that sell-off and it broke that major trend that it was making, it sold off really, really hard, and it lasted a couple days. So I was kind of bracing myself for that. I had a couple of things gapping down pre-market and all these kinds of things. So I was mentally preparing myself for a really fat L. And we were fortunate enough to see some buying, which means that, the market is still pretty strong. Now, 2 days later, we're kind of seeing some resistance a little bit. So kind of like you called, I think it was yesterday or something, that we might start being in like this little volatility period,
right?
A little bit of consolidation, which isn't a terrible thing. It's kind of necessary for us to go higher. We kind of need to just chill out for a little bit.
Yeah.
If not, we might get hit with a huge dump, and that's not what we want.
Right.
So, but there were a lot of people kind of freaking out because we have been talking about how it's eventually going to happen. It's going to pull back. Something's going to happen. And then we thought that it was going to happen this Monday morning. What did you do? How did you really prepare for that?
So I was on the same boat as you. I really thought we were getting a sharp pullback. The trade of the week was a gold name, RGLD. Yeah. And that stock has sunk all week with the intraday strength that we've seen. So I was preparing myself along with you. I've been cutting down on my risk. I've been taking less size as this uptrend gets more and more overbought. Yeah. So I was kind of having less expectations out of the market and things of that nature, where I wasn't going for as aggressive returns over the past couple weeks, because I don't want to say I've been anticipating it, but at some point you kind of have to anticipate some sort of pullback when we reach these overbought levels that we haven't seen in years and years. So I would say I was just, focused on booking more profits, taking less size in trades, and, almost getting ready for the pullback. And it wasn't as sharp as expected, which was really surprising to me, as you were saying, the same. What about you? What did you do?
Well, one thing that I mentioned in Alpha Chat Monday morning was, I was giving a 15-minute rule to all of my trades, whether they were gapping down under my stop that I already had in place, or if they were now a little bit, or even if they weren't gapping down at all. I just wanted to give everything 15 minutes to really let it kind of digest and see what happens. And it ended up working out because I actually didn't get shaken out of anything. Everything kind of bounced back. They all kind of broke their trend, their pattern, but it kept me in. Now I have lower stops for certain things, but it wasn't too bad, because most of the stuff that I was in, I was already up a good amount. So it's not like I was really going to take a huge loss. I was more just kind of losing some profits that I had made over the last few weeks.
Right.
But it ended up not being too bad. I recovered. Tuesday, I basically made everything that made my red. It was a red day. Technically, my P&L was red, but I made that all up the next day and some extra change. And, just kind of keep doing what I've been doing, and it's just being very selective for sure. Not just throwing out any risk to just about anything like we were maybe a couple weeks ago when it was super, super easy.
Right.
Things are starting to fail quicker and things are starting to turn around quicker. So, taking profits quickly, things like that. But mentally, I think
more sluggish. You're seeing a bit more sluggish behavior out of the market, which is kind of our sign for our worry. But what were you going to say mentally?
No, but like I said, mentally, I was prepared for the worst, and I think I handled it really well. I think a lot of people did. Some people got shaken out of a couple things, but I think a lot of people, they did use that 15-minute rule. And for those of you that don't know, the 15-minute rule is basically when a stock drops down below or near your stop, what you want to do is actually cancel your stop and just let it work those first 15 minutes of the market open. Because that first 15 minutes, there's a lot of people panicking. Dumb money loves to sell when shit gets a little hectic. They want to get out really quickly. So you let those 15 minutes digest, and a lot of the times, smart money will come in and just buy up those shares and bring the stock right back up. Now, it doesn't work every time. It doesn't mean it's going to go all the way back up, but you might save yourself a couple dollars by just waiting at least 15 minutes and then placing your stop under that first 15-minute low.
Right, and the most important part about the 15-minute rule is that it's systematic. We try to be systematic and robotic about everything we do. If you're making emotional decisions, one, you're going to lose a lot of mental capital in the process, and two, a lot of times you're going to make the wrong decision. As humans, we're programmed to be, wrong and losers at trading. So whatever we can, do that's systematic is definitely a big bonus and makes trading way easier over the long term. 15-minute rule, me and Ben started doing it in like 2013, 2014. And, it's funny that it's not really spoken about in trading communities, but it's super, super effective.
How did you come up with that? Like, did you just kind of see this pattern that the first 15 minutes on a gap down just goes a little crazy and then it ends up evening out?
It was a desk-wide thing where it was like a 15-minute rule and gap downs, because at that time we were in such a raging bull market that things would gap down and get bought up very quickly. That's the number one sign of a bull market. Gap downs get bought up. So, we were conditioned to do it in those times, and, it just kind of stuck, and it's fun. It's like weird. You don't really see that anywhere. It's so effective.
Yeah. No, that's definitely true. I've really seen it in any books or anything like that. So that's, obviously I know that like I've seen rules where it's like chumps trade the open and professionals trade the close kind of thing. This is kind of a different,
amateurs rule the open, the pros the close.
Yeah,
that's
exactly.
Funny, yeah.
That one.
Yeah,
that one.
I almost got in a fight like that once.
For sure. And but something that I noticed with this little gap down is that people in the chat, they started kind of just mentioning like changing up their whole system, their whole trading methods and everything in it. And the problem with that is if you're trying to change your methods every single time the market changes a little bit, you're going to be chasing every single time. So because by the time you adjust your system to however the market is now trading, you're late to the party, and by then it's probably changing again, so you're way better off saving your mental capital and your physical capital by waiting for your methods, that actually waiting for those times to come back. You can sit back, you can chill out. That doesn't mean don't trade at all. Don't try anything new and only wait for your setup, because, well, especially for the new guys, these new guys, you have to learn how to, manage these movements and kind of understand yourself and learn what you excel at and what you don't. Building that data, writing in your journals and all that kind of stuff, so you can know what you do well and what you don't do too well. And, over time, since you have all that data, you can then really focus on the stuff that works.
Right. And going back to, changing your style and stuff, it goes right back to that 15-minute rule where, we just want to be as systematic as possible. You're not designed, you're not programmed to be a winning trader. You have to kind of dig it out of yourself and figure it out. And the number one thing that trading does is you learn so much about yourself. So it's so important to keep that journaling up, figuring out what you do well, figuring out, your best times, your best time frame, your best setups. All those things are super important so that, you're not making emotional decisions. That's the last thing you always want to do in trading is act emotionally.
Yeah. In I think it was in Market Mind Games, or it was in another book where it's actually not about erasing the emotions. It's about learning how to read them.
Right.
So like I said, I think it's in Market Mind Games where like instead of just saying like, I bought this at X price and it didn't work. What you should say is like, I bought this and this is how I felt when I took the trade. And that can kind of start to give you a pattern, because if you start to know how you feel or you have a winning trade, then if you don't feel that when you take the trade, then there's probably something wrong. And that can save you a lot of money over time, because if you can read that really well, you cut out stuff that you're a little iffy about, which I've been focusing a lot on this year. We've mentioned it a few times. FSLY, we cut it. OKTA today, I believe you cut it, because you just felt like you didn't have the right price, and subconsciously you probably just had these not the proper emotions to take it, and hold it overnight and just swing it.
Yeah, no, completely. And that was more about, a risk situation. Right now, we're seeing that we got 3 up days after a big down day overnight or the weekend.
Yeah.
So we could just be retesting that resistance level for further selling. So I really only want to be in the best of the best right now. My favorite names where I can keep that wide stop and let them let the trades work themselves out. And if they fail, they fail. And if not, so that Octo is like, okay, TA, it still looks good. I was in the money a little bit, but I didn't want that risk on because of, I have a lot of good winners right now, and I just want to let them work. I don't want to waste my time with things that maybe late to or chasing or, whatever it may be.
Yeah, very tough to take any new buys today, Wednesday, just because 3 days up in almost anything. Like you look at almost any stock, DDOG, STNE, whatever it is, they all have, they're all 3 days up. It's very hard to buy because the real stop is all the way down at that pivot point.
Right.
So, buying there super tough. Luckily, I'm in a couple of those from a couple days ago. Like I said, I held through the 15-minute rule, so I was able to hold on to those, and I have a decent price, and that is giving me the ability to just kind of stay patient with them and work. Shake, let's talk about that tandem trade today.
Right.
How did that go?
So that's like a perfect example where it's like 2 days up. So it was really tough to buy from a macro standpoint. And this isn't a trade I'm often taking. So for the listeners at home, this TNDM took out this huge macro level and absolutely exploded. I bought it right off the open with, a bullshit 75-cent stop. But
Sicko mode.
We called it sicko mode because, I know that in my career, I've seen so often that when high beta names have such huge macro resistance levels, when it's like it looks good on a weekly and monthly chart, sometimes, much like when an IPO is taking out that first day IPO high, that huge volume comes in, just spikes, and then the stock breaks out like crazy. We made, that was completely what we focused on in our first few years of trading, was the high beta names taking out macro levels, and honestly just buying the level. So I took a complete shot in it where I saw it had the high volume and I saw it taking out that 71.50 area. So I bought it. I'm not going to give it the $9 that it needs, but I need that trade to work right now. So it's a low probability trade, but I'm going to take a really tight risk, and my risk reward was insane that now that it worked out. If I take that trade 10 times, it might not work 9 times, but Tandem, I probably got 10-1 on the risk reward today. So, it worked out in that sense. It's definitely not a trade I would say that everyone should take, or is very teachable, or things like that, because it involves, reading tape and seeing the volume and seeing buyers off the open. So I definitely took a shot in it, and it really worked out. But I'd say, those macro levels taking out highs, especially in the high beta names, we've been staring at that tandem, that bull flag for the last year.
Yeah.
And further, I had a support buy in a few weeks ago that I did really well with. So the fact that I made money in my active account on the trade allows me to risk more in this name when it's setting up for the macro break. And that's what I did well with it. So if I took that loss today, it wouldn't have been a great loss, but I also had a little cushion in the name since I had that trade last week that worked out in it. So that's the way I justified it mentally. If I took a loss, I was going to be fine with it. I knew what I was doing. I knew my time frame. I knew it was a low probability trade, but I would have been much more mad at myself if I completely missed the trade, didn't throw any risk on for it when I had been staring at it for the past year. So for me, you know, that's worth it. I mean,
Yeah, like me. But it's okay, you
third
know. I
day,
mean,
listen, you got to make decisions. You made a decision. You didn't want to put risk on third day up.
Mhm.
So, you know, that was a decision you made and you have to be comfortable with.
Yeah.
You know, yes, it worked out, but it's not going to work out every time. And there's going to be a lot of times in that situation where, you know, I take that loss and I'm probably a little mad about it, but you have to kind of know what you're getting into. And like I said before, I had that huge cushion in the name from that trade, you know, a week or two ago.
So
where
were
I made,
you still in, or you got out, but just the fact that you have a
I
profit
had
cushion on there.
I sized down from 2,500 in that first trade to 10 shares, so I always have my eye on it. So I've been holding 10 shares, just watching it back and forth. And I saw the last 2 days it ripped up on high volume. So then I sized up off the open today, 3,010 shares, and it worked out.
There you go. Yeah, the cool thing about that tandem is that I mean, a lot of people took it today, but a lot of people took it in different ways. Tom V, for example, I mean, he even, you know, you mentioned that you took a lot off, and for him, this is, you know, perfect base breakout. This is like the perfect opportunity to start a swing.
Right.
So for him, he's looking to hold it for a little bit longer. He ended up selling a little bit at the top to reduce some risk, which is exactly what he should have done, because you got to sell into those big moves like that on first day. You just have to, because your stop has to be at the bottom of that, if not lower.
Right. Yeah.
And then you look at like someone like Cameron, who's chopping day for 22%. You know, he just rode that whole thing all the way up. So, you know, all to all three of you and whoever else took it, they did a really good job in their own different ways, and that's what makes it so cool.
And that's what's funny about, you know, every trader is different. This is what the main thing we preach is the most important thing about trading is finding your own time frame that works for you, that works for your personality traits. You know, that works. Like, I'm not going to teach people to go sicko mode. I don't want people going sicko mode. That's just from years of like day trading at the desk next to all these, you know, expert professional day traders and things like that. So you pick up things. So, you know, I'm only going to put that risk on, you know, in very, very, very specific situations. And it's probably not going to work out a lot of the times. So, and it's not very teachable. So for me, my time frame, it's almost very difficult to teach because a lot of time it involves, you know, tape reading and reading buyers and sellers and things like that. So what we more aim to teach is more of the macro plays, more of, you know, I didn't make 22% in the name, not even close to it. You know, I made whatever it's up today. You know, so shout out to Cameron.
That's 7.
That's a better way to trade over the long term. He's probably going to make more money doing that sort of trade versus, you know, what I'm trying to do over here. You know, I understand that, but I know my time frame and I've worked on it. I've perfected it over the last, you know, 8 years or so.
Right. And I mean, the reason that you all to do that is because you've mastered that bigger picture method. Right. You know, you're able to look at it a big picture, and then you can zoom in and get those aggressive, quicker scalps, you know, to add extra profits for the end of the year. Right. You know, so that's that's really good. You know, something actually going back to what I was mentioning before, how people were kind of like changing their methods and just starting to get really emotional. Something I've been saying in the chat this week is you're allowed to walk away from the desk.
Oh, you know? Yeah. Yo, shouts out to you. Shouts out to you for saying that. I keep saying that shit all day, midday. That helps me. You see me I get stuck.
I know. You know.
And you're like, just fucking walk away. Just walk away.
Just walk away. I had to throw out some memes to give you a little roast.
Yeah.
That walking desk was just great. I saw that. I just started cracking up. I was like, I got to share this. It was so good.
I want that. That thing is incredible. Take that to
I don't know if that's too good for your back, though. Might as well just, I mean, we have phones now. You can just do it from your phone. You don't need that stuff. But yeah, you know, walking away from the desk, whether you have been doing it for 10 years or it's your first year, there's nothing wrong with walking away. I mean, either way, your game plans are going to work whether you're looking at them or not. You know, so just let them work. Most of the time, they're probably going to perform better when you're not watching them, because
90% of the time they're going to perform better.
I can't tell you how many times I have like a busy day of doing something else and I'm like stressed because I can't watch my stocks, and then I'll go at the end of the day, I'll go check what happened, and there was like a crazy drop that I would have definitely sold if I was sitting in front of the desk, and it ended up coming back and I didn't lose anything, you know, and it's happened more often than not. But still, we're only human. You know, we say it all the time. We're only human, and we want to be in front of that desk, and we think that the longer we're in front of it, we're going to do better. But, you know, it turns out that it's not usually the case.
You know, I heard a really funny expression about leaving the desk and sitting there for too long. You're literally, it's like you're sitting at a casino with like 500 games all providing opportunity at once. And it's just this like cerebral experience that, you know, you can get completely lost in. And that's how you start making all the emotional decisions. So, you know, you saying the step away really will force you to look at the bigger picture. And I was talking about that Tandem TNDM trade, that first support buy I had. So I had that when we were in Vermont. I wasn't watching my stock. I was setting a wide stop at a decent position. So I wasn't even watching it, you know, intraday. And then when I got back here, I had all that unrealized P&L that I didn't even watch accumulate. And then I was like, fuck this. I'm selling this shit. You know, I didn't want to give it back. And then it ended up, you know, pulled in a little bit. But I ended up just booking that because the market was too high. You know, I was making all these excuses because now that I'm staring at it, you know, I had to sell it type thing, you know?
So moral of the story, they should have just kept you in that Vermont airport a little bit longer.
Oh my God. I almost fucking no, they shouldn't have.
No more Vermont.
No more Vermont. Sorry, Ben. Not coming back.
Yeah, Shake's upgrading. He's going to Japan now. Okay.
Yeah,
There's no.
I'm gonna get stuck in Japanese airports. Yeah.
He'd rather go maybe catch the coronavirus than to go back to that fucking Vermont airport.
I can't wait. Yeah, I'm gonna be the mask man this week.
That's gonna be a fun trip though. You're going with your friends?
Yeah, I'm going with like 7 of my boys. Doing 4 days in Tokyo, 4 days at Niseko. It's like the powder capital of the world. Snowboarding. You know, not so bad.
You're gonna eat some good food there too.
Yeah. Oh yeah. Ramen.
Oof, they got some good ramen spots.
I'm gonna be a big noodle boy. Big noodle boy.
Okay, back to charts and stuff. So let's talk about a couple. I mean, we've had a couple earnings plays now because you're actually gonna be gone for a lot of this prime earnings season. Right.
Yeah.
But we've had a couple earning plays. DT today. Team was a good one a couple days ago. How have you been doing with those?
So it's funny. We filmed the same exact one earlier and didn't record. You know, we had good differences where you know, I do well trading those right off the open personally, and then I think it's very, very important. We got to reiterate this every video that if you're buying a day one earnings name, you got to sell some into that pop because you cannot trust that move yet. If it's an earnings flag, that's a completely different story. Hold your entire position if you choose, because you can trust that. Now it's built that flag. The buyers have supported it. So now you can trust that move. Day one, it's a complete crapshoot. You can't trust that move. You got to kick into that strength on day one. I do a third or a half. That's what I did with this team, TEAM. I bought it off the open. I kicked some into that 150, and now it's kind of flagging. And now I have such good stock. You know, how have you been doing with them? I know it's been a little different for you, and you made some improvements. I'd like to hear about.
I've been doing well, but I've been doing them very differently. Whereas like I don't take them maybe right open, and I'll actually wait. Because like that first few minutes can be volatile and they can really fake you out, and especially on earnings because you can get some major slippage too.
Yeah. Oh yeah.
So you know you have a buy stop in and you end up buying like, you know, almost like 1% higher than you were aiming to, and that completely messes up your game plan. So I've been focusing more on just kind of waiting for that first super volatile movements to happen, and then see where it kind of bases out, and then kind of just buy on like a pullback, see where it touches support, and then bounce back, and that gives me a way better average price. So for like team, I got my original plan was probably to buy around like if you follow the opening range breakout tactic, which is wait for the first 5-minute high or 15-minute high and then buy above that high on the break, I would have bought at like 145, 146, whereas this time instead I just kind of waited for it to level out, and I ended up buying a lot lower, around like 143. So my risk reward was a lot better. I still was able to grab that 150 move, and I sold some around 150, and now I still have a little piece to just kind of swing. And over the last few days, it's been working pretty well. I mean, it's right back up to those earnings highs, starting to form. So I'll probably have an opportunity to even buy more when it makes that earnings flag that you just talked about. When we actually see those buyers and sellers kind of stabilize, and then we can, you know, kind of load the boat on something like that, because that team is very explosive. So I'm definitely excited for that one.
So going forward, you feel you won't really buy things off the open. You'll wait for it. If it wants to pull in, wait for that pull in and the base type move.
I mean, I think I've gotten pretty good at both. It just kind of depends. It's a case by case basis. You know, that's the thing about trading, is that no trade is going to be exactly the same. And then it's just about mastering your handful. But so far, the two earnings orbs that I've taken were very similar. That DT did a very similar thing where it kind of spiked up, came back down. It just made like a really, really nice base. I bought it instead of buying around like 31, 32 where the pre-market highs were. I bought some at like 30.50, and then I added a little more at 30.70. So I had a really nice price. It was like in the middle. Like if you look at the daily chart now, it's basically the middle of the candle. I have a low risk. I've already sold some, so I basically paid for all of my risk, and now I'm just going to let it work over the next few days and see what happens. If it comes back down, it comes back down. I mean, that I was already hawking that 30 line because that was previous resistance.
Yep.
And it just turned right into support, and that just like when you stack up that previous resistance turn support, it really makes it strong. So
with the earnings power is number one catalyst.
Right, exactly. So you get a ton of volume that resistance held, and it was a really nice one. I mean, obviously, I would have loved for it to rip back up to 32 and go higher, but that's okay. It's just first earnings day. Who knows what next few weeks?
Completely, and that's a beautiful part of our earnings season. I jumped in that DT too. I wasn't focused on it off the open. I was looking at TNDM, whatever else. But people called it out. Resistance to support flip at that $30 with the earnings power. So I was able to jump in that. And the beautiful part about earnings season is that, you're offered a lot more opportunities with great catalysts behind it. We saw a huge reversal in General Dynamics GD today, for example. But, whereas without earnings season, there's normally, there's only really a few great buys throughout the day. There's going to be those few charts that break out and those few setups that are really going. But earnings season is a brand new catalyst, and all these stocks are reporting at once. So it's going to offer a lot more intraday opportunities. That's really why it's my favorite time of the year, because there's just so much more opportunity out there.
Yeah.
That's why I was trading a fucking banshee.
And it's like you say, those earnings seasons can really make your year or even your career, and you can get some really great strings. Now, we're praising these earnings, but you also have to be very careful, especially as like a new trader, because this is like a whole different ball game from what we teach. I mean, it's the similar strategy where you have to be patient and follow your game plan and all those kinds of things for sure. But it is on a shorter time frame, and it's a lot more volatile. So as a newer trader, like I posted in the chat on Monday, I believe or even last week, it was just if you're going to take them, cut that risk down. Like whatever you usually risk on a normal trade, you need to cut it down to like half or even less than that, just to get a feel for it. I mean, you just have to kind of learn how it works, because it's very different to see somebody do it and then actually do it yourself.
Oh, completely, and it's all part of the process. You're gonna. So for you, it's such a perfect example where last year you were taking more of those first minute, second minute trades and weren't finding that success. But that was really important for you because you had to learn that that's not right for you, or maybe that's not your trade or something like that. So now you'll hawk these names all day, and you'll have that buy in like DT, for example, where you bought it off support, and now you're pretty pumped about your position, it seems. Whereas those first 5 minutes of trading, you could take a loss, and that is so frustrating. There's nothing worse in trading than taking a 5-minute loss. That drains your mental capital. You're mad all day. Then you sit there. So when we started trading, we had lockouts. Like I had a $300 lockout, and you take these right off the open trades. You take 2 quick $150 losses. You're locked out, and the pain threshold, they would make you sit there from 9:40 till 4 o'clock and call. No, you had to call out for everyone else. That's what you had to do. You're gonna fuck it up for yourself. You might as well take care of the team. It was so brutal. It was like one of the worst memories I have. The 9:35, 9:40 lockouts, and you're just sitting. And it's the longest day ever, and you're just sitting there. And it's just brutal. But that's what builds up that mental capital, and it really makes you think of what you're going to trade off the open. You're gonna completely transform how you approach risk. If you you got to sit there for 6 hours and 22 minutes. Of just fucking pain, and then you're gonna think about it all night, and it's gonna ruin your night, and it just has all these outward, emotional effects that you really want to avoid.
Yeah, it's definitely a worse feeling to like. You can lose $1,000 in a day, and like you could be kind of pissed about it. But if you lose $1,000 in the first 5 minutes, even though it's the same P&L at the end of the day, it's like you like didn't get your money's worth almost.
Right. And it turns into 1,022 because you have to fucking smash that keyboard.
Right.
If 5 minute $1,000 loss, that keyboard, that's a Barry Bonds play. you gotta fucking that. It's just bad juju. You gotta get it out of the office.
Yeah, yeah.
They used to start charging $22 to our accounts every time we would break a keyboard. Some days you just be like, fuck it, and just like and it was ooh. That 1,000 hurt. That $22 felt good.
I haven't done that yet. I don't know if maybe I have
self-control
or I just haven't lost too bad. I don't know, but I don't really want to find out.
Here's the funny part about trading in an office or a trading group or an environment where it's like we consciously all tried to stop making noises or fuck or punching the screen or doing whatever you had to do. We all stopped doing it, and then the head trader, when he would take a loss, he would just start going, with the mouse. I don't know if you can hear me.
Yeah.
Just hits the mouse a little bit because you get like that little bit of release, just like slamming it. So then everyone then it started, and then we got right back to breaking keyboards in like 2 weeks. So it's funny how crowd behavior was really learned there, and whatever the big guy was doing, everyone was just being a copycat.
For sure.
But you don't want to do it. You don't want to do it. It's not a good thing.
I think that kind of still happens even in alpha chat sometimes.
Oh yeah. But it's different when I'm 6 inches away from the guy. It's
for sure. Yeah, at least we can't punch each other.
Ha.
There has definitely been times where I'm sure you've wanted to punch me, but hey, you're far away, so you can't.
Can't do it. Can't do it. I'm playing. No, not you. Many other people. But so what were you saying? You even see it in alpha chat?
No, I was just saying that I even see it now. That group mentality is still there, even though it's an online community. We can all definitely kind of like feel the vibe that's going on in the chat.
Yeah.
We can feel when things are quiet, when the market gaps down like it did on Monday. It's not as active, either because people are emotionally kind of drained. They see their P&L in the morning, they're like, fuck this.
Yeah.
Some people are just kind of digging into charts. That's what I was doing a lot of on Monday, looking for that relative strength, which really paid off on Tuesday.
Oh yeah.
Because you look for those stocks that are really holding up really well, and those tend to be the leaders when things kind of go back in your direction.
Yeah, if you take anything from this video, it should be that, on big red days in the market, what you want to do is feverishly type up charts and find the strongest ones, because when the market stabilizes or when the market turns back up, those are the stocks that are absolutely exploding. We saw it in something like an MDB. We saw it in that TNDM.
Yeah.
It's just foolproof. That is something I've seen that never, ever, ever changes. The stocks that are strongest on the down days are the ones that explode 2, 3, 4, 5 days later, whatever it is.
Mm-hmm. That's something that's definitely changed in my mentality when it comes to when I see the market coming down or gapping down or whatever. Instead of me saying like, oh shit, I'm going to lose money, I say, oh shit, this is going to be an amazing opportunity. Because I know I'm going to make money back. So I'll take a losing day, but I have to like make up for that losing day by actually doing your homework so you can like financially make up for it in your trading the next day or whenever the market turns around.
That's crazy. If you're really like that, I hate losing money.
I hate losing money too. No, don't get me wrong. I hate it too, but I might as well make it worth something.
Oh, I feel you. That's a great mental approach to have. It's just it's difficult.
Because if one, you're losing money, and then when it comes back, you're not making money, you just lost twice.
Yep.
Really,
So that's emotionally draining.
Yes, that's super emotionally draining, and then it gets hard, and then that's when you start trying to change your methods, and then that's when I tell you to walk away from the fucking desk.
Yeah.
Circle of life. The circle of life.
All right, I'm getting fucking loopy, huh?
So what else? What else is going on, Shake?
Shit.
What's popping?
You got any special earnings season goals? I know you're talking about you're really building upon how you're approaching different intraday setups, especially day one setups like the DT. You didn't want to buy it or whatever it was. You didn't buy it off the open, and that worked for you, and you waited for it to come down and consolidate. Is there anything you have in mind that specifically you're working on for earnings season?
I'm just keeping some capital aside, ready for some earnings flags. That's like what I'm really, really looking forward to. The orbs are fun, for sure.
That's definitely the sexy trade. The higher probability trade is the earnings flag.
They're fun, but I also know that with earnings orbs, I have to go a lot less risk, and I have to just kind of take my profits quickly and all these things. And so I'd much rather wait out those earnings to set up and then really be able to load the boat and take some really nice trades. You look at Microsoft, They had a
Perfect
great
trade. We
earnings
should talk
last
about that.
year.
That was the perfect trade.
Yeah, it really was. And I'm not sure if we talked about it in the other video or not. I think it
No,
was in
no,
the first one that we
that was the
recorded.
first. I think we're good. We're good.
Okay, so in that Microsoft trade last quarter, it had a before the earnings, it had an amazing setup. It ended up gapping up a little bit on that government news, whatever that contract.
Yep.
I moved out. I sold it right on that gap up. I was like, oh, this is the gift. I'm gonna sell it right here. And
And next time when that happens, are you gonna, what are you gonna do next time?
well, next time what I'll do is I'll cut halves.
Exactly, and then let it work.
If I'm not feeling it, or just kind of sell a little bit into strength and let the rest work. Because I really thought, okay, like this contract, like it's not really a big deal, whatever, and I thought it was just going to come right back down. But it ended up working really well, and all quarter it performed perfectly.
Yeah.
It performed exactly like we would want a longer term trade to perform, right up to the next earnings. You're up 20%. So you can hold it through that next earnings report, and it gapped up again tonight.
Yeah, they just reported earnings, and now it's gapping up another $10. So the trigger was like 140. Now it's at like 175. To make 35 points in Microsoft is like, that's a gold star in trading. That's not an easy task.
Yeah, I mean, I would love to have like five names, just like Microsoft, just kind of running and doing their thing and working. And I mean, there's obviously a few people in it, but the one person that comes to mind is Val, because he mentions it. He mentions it a lot, and he stuck through it. There were times where that stock kind of gapped down a little bit through that uptrend, and he just stuck. He stuck to it. He was like, well,
and there were some big gaps. Big time props to him, because
for sure.
It would pull back from, I think it was like 160 down to 150 or something like that, which is like, giving back a third of your profits, but he stuck with it. 15-minute rule kept him in it. Used that new stop, and he's really just stuck with it. And now he's sitting pretty from last earnings flag. Now it's gapping up into new all-time highs, and he can just really up his stops. That's it. That is like, you don't come across trades like that often, but if you can get into an earnings flag and hold it the entire quarter as it rises, and then hold it into the next earnings, because you're up 20%, you're only risking profit. That's how you make the big time bucks.
Yeah, and you just let that stuff work. You don't trail your stops too tight, because you know that you're in the profit no matter what. So it's like you just get to let them work. Somebody mentioned that they had gotten stopped out of I think it was DRI today.
Yeah.
And I pulled up the chart, and basically, there was like an early morning shakeout, a really long wick, and then it came right back up. And the thing is that the stock was still in its consolidation range.
Right.
And something that, I mean, personally I do, and I believe that others should do, is you're not really, the trailing stop is great when the stock is breaking out.
Right.
When it's breaking out of that consolidation and it's finding new territory, that's when you want to use a trailing stop, because you never know when it might just pull down. But if it's still trading in or very near that consolidation that you have pinpointed before you got in the trade, keep your stop under that consolidation. You got to stay under that support, because if the buyers and sellers are still fighting, if there's still a tug of war there's no reason for you to be out until the sellers start to win. And the sellers start to win when it is actually breaching that support, and that's when you get out.
Completely. And the point of sell stops when you enter a trade, it's to tell you that you're wrong. So if you're just going to trail it tightly on whatever the previous low day was, even though it's still in this, let's say, support's at 48, it makes a low yesterday at 48.62. So you rush to put your stop 48.61 instead of just giving it that extra room, because you're kind of scared of taking that loss or whatever it may be. That ends up being the wrong move, because it's not telling you you're wrong. And that's probably the number one thing I see with new traders, is that they have a lot of fear in taking a loss. So they want to too quickly move stop to break even when the stock hasn't broken out, or it hasn't even made its move and climbed into that new territory. As you were saying, you really only want to move up your stops, besides a trailing stop, which is just like taking profit stop. You want to wait till that stock forms a new base, and it creates a very clear new level of support. That's how you really want to stay in the swing trading winners. But rushing to move your stops to break even or whatever it may be is what I see a lot in the new guys, and it gets them chopped up, and it gets them really frustrated.
For sure. I mean, there's nothing worse than taking a loss and then seeing it work. It's like it's the most aggravating thing ever. I mean,
you took 2 losses.
Yeah, exactly. You took 2 losses. I mean, even like Netflix today. I mean, Netflix was a tough one, but I bought that one. I thought I had a great price on it, It started to kind of come back up. It ended up shaking me out by like, I don't know, 40 cents, 50 cents on like a $340 name.
Yeah,
That's so annoying. That's like 1 penny on
that's a
on a,
bid-ask spread. Yeah.
right. Yeah. And, I get shaken out and it ends up ripping back up, whatever, it was a low risk trade. I didn't invest too much into it, but it's really annoying to see that happen. But it happens. But you have to, like you said, you have to wait until the stock makes a new support before you actually move your stop up. And if you are afraid of taking a loss, your first step is not moving your stop. Your first step is just selling some for profit, because that's going to reduce how much you lose if it comes back down.
Right.
So the first step is always paying for the trade. That's the first thing you should do. And then the rest, you just let it work, because now if it does come back, you didn't lose anything.
So a big problem with me, I had that problem too. When I was beginning, I would take out, because I used to day trade like crazy. I would have so many trades going on, and then my first reaction when I would take a couple losses in these other names, well, I got to keep that money in my winner, so I'm just quickly selling that. So I could never really grasp the full profit potential in my winners, because I was so reactive to my losers. And I see that in new guys all the time, and I'm just you try to explain it to them, but that's part of something that comes with experience. Sometimes you got to take the dumb, stupid losses so that you never want to do them again. Shouts out to you in team. A year ago you're buying that off the open. You don't have the right price. You're not happy with it. This year you wait for the right price, right buy, and it is because you learned what you don't want to do, what not to do, and that's really important sometimes.
For sure. It took a lot of pain, but it was definitely well worth it, So anybody who is whether you're part of trading experts or not, if you're going through a time where, you're taking losses and it hurts and all that kind of stuff, it's very hard to look at it in the moment, but later on when you look back, you'll be really happy that it happened, just because you learn so much from it, and that's how you improve. There's no other way to really do it. You can read all the books you want, you can paper trade and practice and all these things, but if you don't take the losses to learn from them, it's you're never going to get anywhere.
Right. I mean, I can tell you do A, B, and C forever, but they say you never learn a lesson like losing money. And from my career, I could say that's the most true statement I've ever heard concerning trading. It's like some of my biggest losses always turn out to be my best lessons. And yes, it sucks in the moment, but then a year down the road when I'm not making that mistake, or I'm correcting that mistake or doing something differently, that's where I see it pay off. And I think that, if you have that mentality with trading where it's like, yeah, it's a shitty loss now, but I'll get this great lesson out of it, which comes with walking away from the computer.
Yep, for sure.
And getting that perspective. That's super important, I think.
Yeah, you learn a lot less from your winners than from your
yeah. You probably learn 10% from your winners, and you learn 100% from your losers.
Right. The winners just kind of keep you where you are, because you look at a winner like, okay, I just have to keep doing that. Whereas when you get a loser, you can actually pinpoint what you need to improve instead of just, I need to not do that. I mean, so the winners are good. Don't get me wrong, but you got to get those losses so you can.
Completely. And it's important to touch upon that in trading, there's a very, very real thing that there are good winners and bad winners, and good losers and bad losers. I'll never get mad at a good loser where it's like a swing trade. I bought into support. I've added when it broke out, and then it just like fails or whatever happens. You'll never see me break a keyboard over something like that. But when I'm like falling out of my system and going to SICKO mode, that's when I'm really frustrated. Those are the bad losers, and those are something you really want to avoid. And the same thing with even a winner.
It's bad winners.
There are a lot of bad winners out there. I used to have so many bad winners day trading. I remember this one time I was up, Under Armour ripped $10, and we were so pumped that it flagged out and it ripped another $1, and we made $1 on it when it was up $10. We were like, oh, we're such nasty traders. But that was horrible trading. Horrible trading. It was a horrible setup, and I learned a really bad lesson at that time about a random reward that I got. It was completely random that it rose that last $1 at the end of the day. That's not something I can do in 10 years from now. I can't scale that up to have 10,000 shares and do it. So the fact that a lot of people have bad winners and good losers is something you really have to recognize, and that all comes with having a focus on journaling and and keeping up with your trades and tracking what you do well and knowing your time frame and all those things.
Yeah, the bad winners are definitely the most dangerous, because you start to build the confidence, like you said, you're such a good trader and all these things, and then all of a sudden, you're trying to repeat that process and you're not, and you just don't understand why it's not working.
Right. So something like my TNDM buy, my tandem buy today, that could be seen as a bad winner because I was giving it a bullshit stop and it was off the open. But the thing is, I'm not going to do that in every single setup. It's got to be this crazy high beta name taking out a huge resistance level because I have taken so many of those dumbass trades that I've spoken about. So it's recognizing the difference when that setup comes along. I'm not buying 3,000 shares and putting a 75-cent stop in a $70 name that moves $6 a day.
Yeah.
Every day in every setup. No, that's because I've been watching this setup for a year and it's finally taking out this macro level. And to go along with the other thing we were saying is I had a little bit of cushion in it because I had a winner in it a few weeks ago. So if I gave that profit back, it's not as mentally painful because I'm still maybe green in the name or break even or whatever it may be.
You have that TNDM in your long-term account too.
Right. So and this is the blessing that I get from the long-term account, and I'm starting to fall in love with this thing. And obviously, the market's at highs for it.
Thanks, Ben.
But no, but the long-term account, it's like I have all these ideas, and I'm hammering out so many charts a day, as everyone is at this point. But for me, I've been doing it for so long in all the newsletters, and I see these stocks work out for like these $50 moves, and I catch $3 of it because I'm so active in my active account or whatever. So something like TNDM, I can buy that at support and just let it work. So in that account, I haven't sold a share in my long-term account of TNDM because I can play out that monthly move so much more easily. And going along with that, it gives me a lot of peace of mind in my active account. If I'm not putting on crazy risk because I think the market's overbought or whatever it may be, I have peace of mind in knowing that I still have these long-term winners that are gaining traction and building P&L and so forth. So if you can do it, it is like it makes active trading so much easier because you're building for the long term and it takes so much pressure off yourself. It's a lot of pressure when you're an active trader, to perform on the daily, especially if the market's not responding well or you're on a losing streak. It gets very tough. So building for the long term, I'd say, has completely changed my mentality and given me a lot more peace of mind.
Yeah, I think it's a completely different business.
Oh, completely.
Those long term is just it's totally different, and I think being an active trader, I think that a lot of people underestimate what that's like, especially like being a full-time trader like you are. Everyone's dream. 9 out of 10 people that go through our chats and stuff, their goal is to become a full-time trader.
Right.
They want to live off of their profits. They want to trade daily, and they want to be able to spend the money that they make. And it's they definitely underestimate what it actually takes to do something like that.
I don't think people estimate correctly the amount of pressure that you're put under every single day. When I first started trading and I was at the prop firm, I had a $7,500 account and I had $500K in buying power. I had so much pressure to perform, to make rent, to put on this crazy leverage in situations that probably wouldn't have called for it, in trades that I know I wouldn't have taken today. I'm not hammering out 20 trades a day like I used to. So, if you don't have to, it sounds all nice, being a professional trader, but there's a lot of pressure and a lot of tough times when you're starting out, especially, that you have to deal with, and I say it's all a blessing at the end of the day, building on my mental capital, learning what I'm good and bad at. But I went through some really tough times in the beginning, especially mentally, where it was like, how the F am I going to start a family? How am I going to do all these things?
Yeah.
If I have to depend on this stock going up, me executing, me coming to work with a game face on it and performing well, it gets very, very difficult when you're trading with your back against the wall. I don't really recommend it. That's why we say so often, focus on the long game, because I focused on the short game and I know how difficult it is. And I know how mad at yourself you get and all that. And it's just very tough. It's not something, it's not as glamorous as it sounds.
Yeah. You can preach it as much as you want. People will still be like, I'll still try it.
Right. Well,
which sometimes
big P&L and that's sexy. $10,000 in a day. Holy shit. They don't really see the work or the pain really that it takes to get to that point.
Yeah, it took a very, very long time for sure. Yeah. It's just it's not really a viable plan. And I don't mean to be a Debbie Downer for anybody whose dream it is to be a full-time trader. Don't get me wrong. If you can go and do that and you have the capital to do it, by all means, but you need the capital, you need the experience, and you need the skills. So if you think you're just going to come in the first year and in a couple of months you'll be a full-time trader and you'll be able to live off of that money and support your family and all these things, it's very hard. And the let's say in the first few months that does happen, I would say that a lot of that came from luck and that it's probably not going to continue that same way. So if you start off like that and you just start spending money that you're making right away, it's going to really start a bad habit. And then once you get hit in the face by the market and you start, maybe you're flat on a month or even you're losing on a month, how do you pay your bills then? If that's your only source of income, then it starts to get troublesome because now you have to take maybe that initial capital out of your account or some of it. Now you're trading with less money, which means next month let's say you have a great month, but you have less capital to trade with. So that amazing 10% a month is only half of what you would have made had you not taken any money out.
And, good luck fighting off depression when you're going in, taking losers every day. You can't figure out how you're going to pay rent and you have to come and perform. That's the only way you're going to make money. It's just a recipe for disaster is really all it is. Mm-hmm. It's, I'm blessed that I've made it to the point where I am, but like there were a lot of times starting off where I was like, how the fuck am I going to make this work?
Yeah. No, you definitely, and that's why we always talk about focusing on having different streams of income. This isn't supposed to replace your income. It's supposed to add another source of income.
Completely.
You're supposed to take whatever you do, invest it into your trading so that you can grow that money even more and multiply it. That's all it is. It's a magnifier of your capital.
Simple math. It's a very high probability game when you have multiple sources of income. You can add to your accounts and you can play it for the long term. It's a very low probability game when you have $7,500 in your account. You got to turn that into $50K fast, and then you have to turn that $50K into the next $100K, and it's very difficult. You always want to keep probabilities on your side in this world.
Absolutely. Well, check. I think we're gonna wrap it up right here. I mean, I think some key points here is learn to step away from the desk. It's a good thing to do. Those earnings trades can be super volatile, so make sure if you are taking them to take some profits quickly. Don't start switching up your trading methods as soon as the market changes a little bit. Just kind of wait for your setups to work again.
Foot off the gas, maybe.
Yeah, foot off the gas. Go work on those other sources of income while you're waiting. Study the charts, find that relative strength so you can be ready and hit the ground running when it turns back around. And by the way, Shake, tip for you, coronavirus.
Yeah.
You can actually, apparently, according to the internet, and the internet is always right. So according to the internet, is you can actually save yourself basically by being in very hot temperature or drinking a cold alcoholic beverage. So a lot of saunas and a lot of cold beers.
No, I got to work on my health. I'll just be boozing for 10 days straight.
Exactly. So if your significant other is complaining that you're slacking or you're hanging out with the boys at the sauna or drinking too many beers, just let them know that you're just trying to have safety precautions. You don't want this coronavirus, and you're just trying to save yourself and your family, and that's it. And you'll be off.
Very simple. Very simple.
All right.
Looking out for you.
Exactly. So we're looking out for you. How about you look out for us? Shoot us a little like, a little thumbs up. Subscribe if you haven't. Hit us up with any questions you might have. Actually, what we'd like to do. Yeah, just smash that thing. Don't smash your keyboard. Just smash the subscribe. But
sometimes it feels great.
On our next episode or one of these future episodes, we would like to bust some myths. So if you have any myths about trading, whether you've heard them yourself or other people have told you them over the years, whatever it might be, comments down below, or if you're part of Trading Experts, you can hit us up with any myths and we'll actually just kind of talk about them on camera and either bust them or confirm that they are a fact.
I like it.
And with that we say good night.